Welcome to your current mortgage market update. Today is July 17th, 2023. This market update is for the month of July. It matters where you get your news, so make sure you get it here because you want accurate information that is actually affecting mortgages. So let's jump to it. Okay, so we know that buyer demand has returned. We tried to warn you about this, that it was going to happen. Spring through fall tends to be peak buyer demand. So in the end of 2022, when things did slow down a little bit, we told you, doesn't matter what the rate is, get your house under contract while you can, while you're not in a bidding war, because we are seeing bidding wars on pretty much every offer going out. So make sure you are working with us, that we can help you get your offer accepted. We have a lot of different strategies to do that. So make sure that you're working with us, that we can walk you through and coming up with a good game plan to get that offer accepted. Now, there was a housing settlement done for quarter two. This was done by Freddie Mac for the week of May 11th through the 20th. And this is important to note that 18% of people say they are likely to buy a home in the next 6 months. And 16% of homeowners said they are likely to sell a home in the next 6 months. Take note that there's already more people looking to buy than there is sellers. So that's an important note, and that's what's causing some of the issues with inventory. On a good note, the U.S. credit score is very healthy. We are at 714 for a national average, and that is also showing a credit score of 765 for being the median credit score for people getting a mortgage. This is great news. And that's because depending on what loan program you're going for, it affects differently. But the higher the credit score, the better the interest rate you can get. Now, some programs that affects a little bit more than others, but this is great news. It's also important to note that those student loans, those federal student loans that have been on pause for the past 36 months, will be starting back up. September 1st, invoices start going out for payments October 1st. If you were in default on your student loan when it went on pause 3 years ago, when it comes out of being on pause, you will be on default again, and it will hit your credit report automatically. Now, there is solutions around this. Please reach out to us. We have ways to help you through this, and we have gotten very educated with these student loans so we can help you not only solve that credit issue, but also bring down those payments to help you increase your buying power for purchasing a home. Now, here is a quick graph showing you the different brackets in which people are looking to buy homes. You can see the biggest bracket, 45% of the homes that are being sold are between $250,000 and $500,000. Now, this is a national average, but look at that. 4.2% of homes are under $100,000. And that makes sense. If you look around, it's very hard to find a home under $100,000 these days. Even under $250,000 to find something decent that you could put a family in. So you can see these numbers, 19.2% are 100 to 250, but your biggest volume there is 250 to 500,000. Now, Lawrence June, he's the chief economist for NAR, National Association of Realtors. He came out saying available inventory strongly impacts home sales. Existing home sale activity is down sizably due to the current supply being roughly half of what it is in 2019. Or what it was in 2019. Now, here's a graph to show you that. We thought inventory in 2022, that was this red line, was low. But look at 2023's inventory. You see this black line? It's just crazy how low the inventory is. A lot of it has to do with people are in these low interest rates. They don't want to sell that house, get out of that mortgage because they are locked in their head about these low interest rates. But there's ways around this too, and how you can actually be paying more in the long run staying in these houses. So it's important to be talking to a reputable mortgage advisor that can walk you through this information. Now, residential home starts. This is important because there's only so much inventory out there, but we could build more, right? So you can see how in 2000 to 2007, we were building 1.7 million households. Demand was not that high at that point, which is how we got into that housing crash. We had all this supply and no demand. So that's what led to that housing crash. Then you go to 2008 to 2014, where they're building this low supply of houses, but demand kept creeping up. So over time, we ended up with more demand than we had households being built. Now, here we are in 2023. They're averaging about 1.5 million households. The problem is that is not even keeping up with current demand, let alone hitting any of the backlog. So that is the problem we're in right now. Builders cannot build fast enough to let alone keep up with demand, but take down some of that backlog. Right now, we are about 4.5 million households behind in inventory of where we need to be just to get up to demand. Now, housing values, right? We knew we had 2 years, a little over 2 years of incredible housing values, over 20%. We told you that was not going to sustain. It was not sustainable. So we did expect home values to come down. So you can see where we had some really good numbers starting out 2022. Then we ended 2022 with some lower numbers. And now here we are the past 3 months, we have had positive home price values. Now, Case-Shiller is the gold standard when it comes to home values. You also have your FHFA and CoreLogic also do their numbers, but you can see they all pretty much run in sync with each other, and they are expecting a positive home prices for 2023. In fact, we're expecting home values to go up over 4% for this year. Now, last Wednesday, we had a consumer price index come out. Now, remember, this measures inflation on a consumer level. At one point, we hit 9.2%. I'm sure you all remember that. Inflation, it has come down. Inflation has actually come down to 3% as a headline number. I want to show you this graph because it's important to remember with inflation, you're adding up the most recent 12 months. Well, when we got June's report last week of 0.2% inflation, we dropped off this great big one of 1.2%. So that's why you saw the headline number come from 4 down to 3, because we dropped off a 1.2 and we took on a 0.2. So we dropped a whole percent in headline inflation numbers. So here's what this graph shows you in the purple, the headline inflation. I'm sorry, in gold, it shows you the headline inflation. In purple, it shows you the core reading. Now, the core inflation strips out food and energy, and that is why you see it higher than the gold. So the core reading is what the Fed is looking at when they're looking at, do we increase the federal funds rate? Remember, they meet next week on July 26th, and right now it's a 92% chance that they are increasing that federal funds rate by another 0.25%. Remember, that does not affect mortgage rates. They're not going to go up 0.25% just because the Fed raised it. What is going to go up 0.25% is your home equity loans, your car loans, your lines of credit, your student loans, your credit cards. Credit cards are topping 20% right now. Home equity lines of credit are topping 10% right now. So this is really important how it's hitting the consumers out there. And this shows you the core reading, again, because this is what the Fed has been looking at. Now, we know next month we're going to drop off this low number of 0.3. So you're not going to see core inflation be a whole lot better next month. But when you get inflation for August and September, when we drop off these 0.6 numbers, you should see that get better. Also, last week on Thursday, PPI came out. That's the producer price index. That measures inflation on the producer side. And this is important because their headline inflation increased by 0.1%. It was below expectations, but their year-over-year number fell 0.9% to only 0.1%. So they're saying inflation as a headline number on the producer side was only 0.1% in the last 12 months. So that is awesome. This is the lowest level since August of 2020 when the number was actually negative. Now, core inflation, that also went up by 0.1. It was, 0.1 lower than expected. Their year-over-year number decreased from 2.6 to 2.4, which was just below expectations. The bottom line is the producer price index is extremely low right now, and this can lead to lower consumer price index, so lower consumer inflation, or the producers can choose to pass on that savings to consumers, or they can choose to hold it for themselves and increase their margins. So we'll see what they decide to do. Now, mortgage bonds, this shows you where the bonds are trading. So this is showing you your mortgage rates. Remember, green is good, rates are getting better. Red is bad, rates are getting worse. I want to just show you, this is for the last 90 days, but this big green line right here, this was the day that we got the consumer price index last week. So our interest rates did get better. And the day right after this green, that is your producer price index. So we had these two really good runs. And now anytime you have a run like that, it does pull back a little bit. So that's where we are. So we're just going to keep an eye on this and see where things go. But if you look at the where Fannie, the MBA, NAR feels that rates are going to be, you can see for the next 4 quarters where they are projecting rates. Now, remember, it wasn't that long ago you saw them projecting rates high 4s, low 5s. So it is taking longer for these mortgage rates to come down than what we thought, but that's okay. They will come down here though soon. And just to show you, National Mortgage News Daily is a great place to see what the average mortgage interest rate is out there. Remember, it does not show points, how many points people are paying, but they're showing right now a 30-year rate at 6.89% to give you an idea on where a conventional loan is, and then you see FHA and VA here as well. So if you have any questions about anything, please don't hesitate to reach out to us. Remember, it matters where you get your news, so get your news here with the Rebecca Foote Mortgage Team. I hope you all have a wonderful rest of your day.